Hello, everyone. I think we are ready to get started. Let me just put the risk warning up as usual. There's a lot to talk about today. We used to do these. Oh, hang on a second. I'm getting feedback. Hold on a second. I could hear myself talking in my ears, which is never a good thing. So we normally do these just once a week on a Wednesday, but for the last couple of weeks, we're doing Monday, Wednesday, Friday, which has turned out quite fortuitous because we have quite a bit of market volatility, to say the least, at the moment. We've got massive swings in stock markets yesterday. We'll start off with that. We came into yesterday, I think, ahead of the Open, the US Open. The Dow was flipping around, but it was forecast to start about 300 to 400 points lower. There'd been weakness in Asian markets overnight, so that really weighed on Europe and the out-of-hours market for the Dow. So lots of volatility there. Oil has slipped to a 2-month low. The pound looked like it was flip-flopping around 130, and that has fallen quite heavily today. And gold's moved higher. Actually, as you would expect, with all of this volatility across the board, we've seen a bit of a move in the price of gold, or continuing that breakout, I should say. So let's get started. I think let's start with stock markets because they were the most volatile yesterday. Let's maybe start with the Dow. Let me just bring up our Dow chart just to see where we were yesterday. Let's make this a shorter term chart just to see that the scale of the sell-off. Right, where were we? Hold on a second. Yesterday, the 24th. So this was coming into yesterday, and the sell-off started. We did see on Monday something of a bounce back maybe in markets during Monday sessions. So this is Monday session, and it closed here on Monday. This was Monday's close, and then overnight from about I think midnight, 1 o'clock in the morning, when those Asian markets were selling off. So we saw weakness in China and Japan. This is what the Dow was doing. So the Dow had finished around about 25,300, something like that. And then it traded as low as 3:30 yesterday. So an hour into the US session, it was trading as low as 24,800. So we'd seen a 500-point sell-off from the previous day's close. And then there was the move yesterday afternoon after the first hour of trading. It clawed back almost all of the losses. I think it still finished down about 100 points on the day, but a massive turnaround during the day for US markets. Let's just take this out to a daily view. I think this does leave, for me anyway, something of a confusing view here, and I think we should expect the potential for more volatility in the days ahead for stock markets. I mean, clearly we had that sell-off in the second week of October. It traded as low, this is the Dow we're looking at, traded as low as 24,900, but bounced 1,000 points back within 5 days. And then it was coming back again, and the expectation was for these old lows to hold at 24.9, but they got taken out yesterday, but it did snap back quickly. But I think it's really confusing now. So what happens next? I mean, do we see this market under pressure again and we go back and the levels to watch are 24.8? So I really don't know at the moment. I think because we punched lower yesterday, it's a market, even though it bounced back strongly, I think is still under pressure. Let's just take a step back and have a look at maybe the bigger picture view. I think those recoveries from May, on the Dow at least, are they still intact? Let's just pick up on the levels and look something like this. Then we'll take a look at the indicators. I keep clicking on delete here by mistake. Hold on. There we go. So you could argue, if we're looking at it from a trend point of view, a recovery point of view, okay, we are still just about still within that recovery off those lows from May. The lows yesterday, okay, they had a look through the trend line, but overall it did come back off it. But I still expect, I think, plenty of volatility in the days to come. Looking at the Dow down here, it went very oversold on that sell-off. The RSI got dragged back on the bounce back, didn't go oversold yesterday. So you could pick that up as divergence. You have this thing called bullish divergence where the market slips to a low, then slips lower still, but the RSI makes a higher low. That can be a suggestion that maybe the weakness that we're watching. The weakness is maybe starting to run out of steam, but I'm not too convinced yet because we saw such a sharp sell-off yesterday, despite the bounce. The MACD has gone to a really extreme level down here. So again, if we saw a couple of days of stability in US markets, we could expect this thing to pull its way back up, and we get a buy signal off the MACD. But I think for now, just be prepared. I think for more volatility in stock markets. Clearly very nervous after what we saw yesterday. Let's take a look at the S&P. So I do prefer the S&P to the Dow because it's a broader index. We're looking at 500 stocks rather than just 30 stocks, which the Dow is. I think when we looked at the S&P last time round, it depends again where we drew the recovery lows from. If we drew it from here somewhere, then that first sell-off did break through that trend. Like the Dow, it pushed below that previous sell-off low yesterday. So it does still suggest it's a market that is under pressure. RSI, pretty much same sort of shape as the Dow RSI, went very oversold, down to 10% on that initial move in the second week of October. Didn't go anywhere near as oversold yesterday. So maybe, we've got, again, this bullish divergence building up here. But let's see what today brings. Let's look at some of the levels to watch. Let's flip this over to an hourly. Let's just get rid of some of this stuff. So this was the move yesterday on the hourly chart. So those were the old lows at 27.10. The market traded as low as, was it 90? Yeah, 26.90, 92 yesterday. Bounced back in the afternoon. And we've had a bit of a wobble, bit of a sell-off overnight, and a bit of a recovery over the last few hours. Let's see what happens going into today. Okay, there's maybe the potential for more recovery today, but these are, still incredibly volatile markets. So I think it's really hard to call, given the moves that we saw yesterday, punching back down through those lows. And the DAX, I think on the DAX, if we bring it back to Europe, the German DAX slipped to its worst levels since December 2016. So almost 2-year low. So a 22-month low, very briefly on the DAX yesterday, back to these sort of levels from the middle of December. So there's the DAX. I suppose the aggressive trade isn't one I would do, but if you really want to be a bottom picker, we're a buyer now with a stop loss under those recent lows. But given those lows were only set yesterday and the market was really weak, it's probably not something I'd recommend. So far today on the DAX, we are still well within yesterday's range. So I think a choppy day, but nothing in the way of real progress. So I think stock markets still really nervous. We have seen recoveries, but like we saw yesterday, a week's worth of recovery can get wiped out in just a few hours, because we had some sort of nervous Asian markets. So I'm expecting more volatility in stock markets. It'll be interesting when we do this on Friday. Let's see where we are on Friday after a couple more days trading. But clearly, if markets get under pressure again, watch those lows from yesterday. So on the S&P, it's those lows at 27.90, 27.92. If we break below those, you'd expect, 26.90 on the S&P. You'd expect a deeper sell-off again, more panic if we see those lows broken. So I think for me, those are the big levels to watch. Let's look at markets that are maybe not quite as volatile, but still interesting. If let's take a look at crude oil. I think our video for crude oil, so our sort of medium-term look at the state of the oil market, went up last night on YouTube. And it is interesting because we've had this run. So this is US crude. And that we've had the run since June of last year from, if I just pick it up on there, June of last year from about, why is it not doing that? Hold on a second. What am I doing wrong here? It doesn't like that line, does it? Okay. All right, here we go. So we did that run from June of last year, and I suppose we could, if we took it off the base, it looks something like that. So that's our bigger trend for the price of oil. Only this month it pushed out to what was pretty much a 4-year high, so the best levels since November. But it's sold off really heavily since then. Let's zoom it in. So we see it's come back from $77 a barrel. Yesterday traded as low as 66, so it's lowest levels since August. But for oil, I think it's interesting because that trend is still up. So that bigger trend for oil is still definitely up. If it's going to bounce from anywhere, then we're pretty much here. We've seen since June of this year this sort of the 63 to 64 area, these old lows from June here at 63. The market came back in August to the lows at 64, and we've seen the buyers come back in. We're seeing the tiniest bit of strength today. At least it hasn't slid lower today. But I think it's an interesting market to watch, because if it's going to turn around anywhere, then we're pretty much here. It needs to go below, well, I suppose this level down here, 57, 58, to completely change this trend. But for now, because this has been such solid support, I think, again, it's another one that could be an interesting few days. Later on today, we've got the crude oil inventories at 3:30 UK time. So these come out normally every Wednesday. It's a weekly announcement. It shows basically how much oil is stockpiled in the US. So we can normally see some volatility for the price of oil off the back of that. Looking at the RSI down here, 10-day RSI, it's very oversold. So if we wanted to build an argument for maybe this weakness coming to an end, that helps that. This is the most oversold it's been since at least back here, at least back since June. So let's see what happens. Again, I think in the video I did yesterday that's on the YouTube channel, I said I wouldn't necessarily be in a hurry to buy just yet, but I think it's an interesting one to watch because we're back to where we've turned around before. So the crude oil 2-month lows, but that big trend still up. While we're on commodities, let's take a look at gold. We've picked up on this over recent weeks. The fact that finally gold had got a lot more interesting. And there's my arrow that I delete every time and comes back. So gold had got a lot more interesting. We'd had this trend down off the highs from up here. It broke out of that downtrend finally about 2.5 weeks ago. So the move through 1210 broke out of that downtrend. It did hit a fresh high for this recovery yesterday. So getting back to levels not seen since July. So trading around about, where is it now? About 1230, 1228. And I think like for me, that it does, the fact it's held at these levels does add more weight to the fact that this looks like a valid breakout. And for me, the more interesting one is if it sells off from here. So the interesting move is if we see it under a bit of pressure, if the rest of markets calm down a bit for a couple of weeks and we see gold start to drift off, where do we see the buyers come back in? So it's the sell-off and maybe the hook higher that's maybe the sort of entry point I'll be looking for. But for now, at least, it's holding after that break, and it is confirming that trend may well have turned. And finally, the currencies. Let's start off with euro. Then we'll look at pound, because the pound is on a really, really big level. So it had been so far something of a quiet couple of days for euro, but it has started breaking down. So we had seen the euro had been holding had a sort of 114.30, and it's broken today. So this is the lowest the market's been. We've got to go back to August. So it's trading just above 114 now. And there's not much in the way of support until we look at those old lows from the middle of August, around about 113. So it's a market at the moment that looks weak. Let's take a look on the hourlies. And I think we're just seeing a bit of dollar strength, maybe because of the volatility that we've seen in stock markets. The dollar, like gold, is seen as something of a safe haven in times of trouble. So we're seeing the euro break lower today. Of course, there's also the concerns about the situation in Italy with the budget and their deficits, and a bit of friction between, to say the least, between Italy and the rest of the EU. That's really not helping things. So not surprising, maybe, to see the euro under a bit of sentiment and a bit of pressure. But I think the big level to watch is these old lows at 113. So for now, it's weak. It wouldn't be surprising to see it continue to be under pressure. Let's see what happens if it gets down to the low 113s. But I think the pound is maybe the one that is the more interesting out of the two. We had that when we were looking at this earlier this week. Let's just tidy this chart up a little bit. There we go. Let's just get rid of some of this stuff. So looking at this earlier this week, 130 had been something of support, and then after that was 129, and we're here now. It's already probed through. So the pound under some pressure here, pound US dollar. It does start to throw into question the validity of this, recovery here that was looking like that. The break, if we start breaking below 129, we're breaking below the previous lower lows, these sort of levels here. So I think it's an interesting one to watch this afternoon. If we flip this over to an hourly chart, I think we can see this. So the question is this break a false one? So with it just starting, not quite, I suppose, starting to trickle below, these old lows, sort of in the 128.90 to 129 area. Are we going to see a bit of strength coming in? I must admit, when I saw it yesterday, it flipped. It sold off below 130. Yesterday, it rallied up to 130.60. I thought, I wonder today if we'll see some strength and maybe the start of a recovery. But clearly, we're not. It's broken down to its worst level for what is it? It's about a month and a half now. So I think it's all about this 129 one for the pound. So after a fairly quiet start to the week, we are seeing this market under pressure. I think that's maybe the one to watch this afternoon. Does 129 continue to hold? So lots going on yesterday. It's probably one of the most volatile days we've seen for some time in stock markets. And I think at the moment, given that stock markets broke below those previous sell-off lows, it's a difficult one to call either way, because it still looks weak and we should expect more volatility, So I think that would be the theme for the next few days for stock markets. Expect them to have the potential for being a bit wild. For currencies, pound US dollar, I think, is the one to watch. Do we see some sort of strength coming back in at 129? We're not seeing it yet, has to be said. And oil, the bigger picture, trades maybe on oil, no urgency to be a buyer at the moment, but we're getting back to levels where it has turned around in the past, and that big trend is still very much intact. So I think in the middle of the week we've got something of a confusing picture. Let's see if it's a bit clearer by Friday. We'll do this all again 12:30 Friday lunchtime. We'll see if stock markets have calmed down and whether 129 ends up being something of a floor for the pound, but plenty of markets started to move in the last 24 hours. We'll wrap things up there. To find out more about the company, if you go to the website, Capital.com, any questions about this afterwards, leave a message in the comments. I do read all the comments, or drop me an email, david.jones at Capital.com. And you can follow me on Twitter for updates and big levels. I'll try and post up interesting charts during the week, and my Twitter address is @JonesTheMarkets. But thanks for coming along today, and we'll do it all again on Friday.